The United Bank for Africa Group has recorded double-digit improvements across all its major income lines in its first quarter results of the year. Driven by year-on-year growth in interest income, it recorded an 11.8% year-on-year growth in gross earnings to close at 147.2 billion naira for the 3 months period ending March 2020, compared to 131.7 billion in the first 3 months of the year. Also, Access Bank, another Tier 1 institution, recorded a profit after tax of 40.9 billion in the first quarter of the same period, 2.6% more than the 45.1 recorded in Q1 of last year. Joining me in the studio to make sense of these financials is Arise Business Analyst Chika Mbonu. Thank you, sir, for joining us. You're welcome. You're welcome. So, I believe I think we're supposed to.
Let's have the UBA first.
UBA, yeah. Let's start with UBA's income statement before we come to Access Bank. So, as we're pulling that up, what's your take on how UBA performed?
I mean, double digits. You do recall that UBA
yes.
in 20 geographies, 20 African countries, locations in New York, London, and a rep office I think in Paris. It's African Global Bank. So good Q1. All the banks coming out from a glorious 2019. So this Q1 normally, for most of them, is a slow period. But for what we have seen so far during the year, because of this COVID crisis, this most likely may be the Q1 for most banks may be their best quarter for the year. So for UBA, on the top lines, double-digit growth on gross earnings, which is very, very impressive. And during this period, the two elements of the gross earnings, net interest income and non-interest income, of course, grew again double-digit. So for UBA, this is solid performance for them on the top line.
Okay.
Operating expenses, rode on the income to expense ratio.
Yes.
This held it constant.
So up by 13%.
Yeah, 30%. Yeah, okay. But profit before tax, of course, grew by 9%. So for UBA, solid performance on top line. Held the expenses level, and then, of course, they grew the profit by 9% before tax.
Okay.
Let's look at the balance sheet.
Balance sheet performance.
Balance sheet performance for UBA.
Okay.
Balance sheet performance for UBA.
And
total
assets. How are you seeing things there?
Total asset grew by
right?
Yeah, total asset grew by 13%.
So they had 6 points.
Yeah. For the period that we are in now, with the weak macroeconomic environment we have in the country, UBA had done very well. Yes. Total assets grew by 13%, customer deposits by 11%. Do you recall the customer deposits gives the impression of the solidity of the bank, how confident are the customers in putting their money in that bank. So that grew by 11%. And of course, net loans for UBA grew by 9%. And again, in line with the CBN policy, I think CBN will be happy to hear that. So you will notice that the growth in net loans has a direct relationship with the growth in their net interest income, and of course the fee lines.
Okay.
Now the other thing that's important here is the customer deposits of UBA. More than 70% of it is in retail deposits, and that has brought their cost of funds very low.
Okay.
And that accounted for the growth in the net interest income. The fees and commission line is driven by their activities in the electronic banking, and which grew substantially by more than 17% on net fees and commissions line.
17%?
17% on net fees and commission line. Very double-digit growth in that.
Okay.
UBA have done very well. And then, so you look at the ratios, UBA, let's look at the first one that you like, the MPL. MPL.
My favorite metric.
MPL. 5.3 last December, but it grew to 6.5 this quarter.
Okay.
Some growth there.
Okay.
Cost to income ratio. UBA was at 62.1 March last year.
Yes.
But it came in at 62.4. Considering the inflationary environment that we have, they've done very well in this area to hold the expense very low. And then, of course, look at the return on the average equity.
Yes.
At from 16.2%
up to
19.9%. So overall, very decent quarter for UBA. As we said, going to the rest of the year, Q2, we'll try to see how they grow on this. Navigate on this, the environment that we are in.
So shall we move to...
Let's look at Access Bank.
Access Bank now, yes. So Access Bank, the income statement first.
Let's start
with that. Yes, sorry, here we are.
Access Bank result is a very interesting result. Very interesting result. And let me tell you why.
Yes.
The Q1, the 2019 figures that we're looking at here, is the Access Bank sold. Do you recall Access Bank matched with Diamond Bank?
Diamond, yes.
So the Q1 result we see here is Access Bank
only. By itself?
By itself, because by this time, the merger had not actually taken place.
Okay, yes, that's true. Okay.
By the time they published the Q1 2019. Now, but the interesting thing is, look at the bottom line. Look at the last figure there. Profit before tax.
Yes.
Look at.
That's okay. Okay, I see the.
So you see the combined bank.
Yes.
Made as much as the single bank. And so for the analyst, it's a very interesting figure, very interesting scenario. But look at what's happened there now. The gross earnings, you can see, substantial, 31%.
31% growth.
It's shown the growth in the merger narrative. That was very, very important in the merger. Look at the net interest income. Again,
also double digits.
Double digits. The merger narrative worked. Look at the net non-interest income again.
Almost
59%.
60%.
Yes. You can see the merger narrative worked.
Yes.
But now that's where the other issue is. Again, still, look at the operating expenses. Look at the growth.
That's 64%. That's a massive.
Because it's again because of the merger. Because of the merger.
Massive jump
IT costs, staff costs, and so many other costs are
maintenance of branches and so on.
Yeah. Because as I was driving some areas, so there's some streets you go to, you still have some 2 Access Bank branches.
Right, on the same street.
Because they have not done the things they should do to get the economies of scale arising from the merger.
Right.
They are still carrying the same staff strength as to Access Bank plus Diamond Bank. Diamond Bank. They're still carrying the same IT platforms as to Access Bank plus Diamond Bank. So you can see the merger narratives have worked on the gross earnings, net interest income, and non-interest income. But below the line, below that, you will find that they're still struggling with the issues on the merger on the operating expenses line. That's why it grew by 64%. Look at again the issue of merger narratives again on the impairment charts. You can see that how much you grew.
That's
again,
large.
We knew that from the beginning of the merger that this is an area, the weak point of the merger.
Right.
The fact that at that time Diamond Bank had a lower quality loan portfolio than Access Bank, and they're going to pay the price for that, and that's what's happening here. So not surprising, therefore, that even though, look at the PBT, even though that for March 2020 is a combined bank,
and it's still
the growth is just May
3%.
May 3%. So that's that. You need to but let me give it to them.
Yes.
Let me give it to them. If you look at the total earnings, the PBT for 2019,
yes,
so about 115 billion. If you divide it by every quarter, it's just below 30 billion.
Right.
So you can see that this
it's over that average.
That this is actually a growth for them.
Okay.
But I do believe that once the Access Bank gets his merger narratives right on the operating expenses, IT, and staff levels, they will start seeing reach bottom line from that. Yes.
Right.
Yeah. Let's look at the balance sheet.
Balance sheet.
All right. The balance sheet. So compare the balance sheet for December. You find that 2% growth on total assets. Customer deposits, marginal 5%, and a loan by 2%. Just nominal growth. Single growth. Let's look at the ratios.
Okay.
The ratios. Yeah, on the NPL,
yes.
NPL came from 5.8% to 5.5%.
Slight.
Cost income ratio. Cost income ratio, you can see that's where you see the issue where they're suffering. Access Bank is suffering. Look at the single Access Bank. Look at the single Access Bank.
Okay.
And then look at the combined bank. The same issue of merger narratives.
Gotcha.
Once they can get this right, Access Bank results will get much better. Okay. So, for them, a decent result for the quarter.
So how would you compare with what we've seen so far?
After the big five,
the big ones,
4 have published for the Q1. We're just waiting for Zenith Bank to put in their figures.
Yes.
So on the PBT, we'll find that GT, as at now, GT Bank came in at 58.2 billion. Followed by Access at 46.3, and then UBA at 2.7, and of course First Bank at 28.7. So I mean, the same proportion usually. Well, when we see Zenith Bank, we're able to conclusively know what's happening.
And then also it's a rough period. We've already talked about
very rough period.
So how are you seeing things going into Q2 and the rest of
just like I said when we were looking at the GT results, we do believe that the Q2 that we're in now is going to be the softest quarter for the banks for the year, because this is when the full impact of the COVID crisis will impact the bank's profitability. Starting from their loan books, the quality of their NPLs will increase. Starting from transaction volumes, we showed that when we did GTB that the Nigerian Star Payment System, the volumes of transactions are all falling, even though people are using more alternative channels now.
Right.
And so we'll find that there's going to be a problem there. We also raise issues of those banks that are holding portfolios of foreign exchange that are negatively long. You know, if the liabilities are worth more than the assets, they may have foreign exchange losses. But that may not be the case for most banks in Nigeria. And so the other thing also is the loan books of the banks, those who are exposed to the oil and gas sector. That may be also the other issue. But one of the variety things here is the CBN, the regulatory agency, in their battle to save the naira. And they have been, touching the banks and the liquidity. Yes. Just the other day, they debited the banks more than 1.4 trillion naira.
Yes, they did.
In trying to, stifle their demand for foreign exchange, enable them to enable the system to manage the exchange rates. So those will affect their profitability this year.
Going forward.
So it's going to be a tough year for most banks.
All right, business analyst Chika Mbonu giving us the insights there on the Q1 performance for UBA and Access Bank. We appreciate your insights, sir. Thank you so much.
Thank you.